Damilola Akibongbe, and I will be the moderator of the session. The session is expected to run for 1.5 hours with 2 paper presentations. The papers will be delivered by Taiwo Okwade, Business Unit Leader for the Financial Service Industry of the Tax Function in Deloitte, and Patrick Nze, the Lead Partner for Tax Operate. The first paper would be on navigating the growing complexity of tax operations and business dynamics in the financial service industry, anchored by our Taiwo, whilst the second paper would be delivered by Patrick, titled Tax Operates, Reimagining the Way Tax Operates for the Future. As a brief background, we are in a dynamic economy with fast-changing regulatory, technology, and talent dynamics of business innovations. It is to this end that organizations need to upscale and reinvent models and processes. Globally, companies in the financial service industry are now repositioning their tax model to match reinvented business model. Thus, this webinar is designed to educate participants on the importance of tax operates in capturing a potential opportunity for change. It will also highlight the benefits of our tailored approach in ensuring the optimal tax operating model for various businesses. In order to ensure that we make most of this event, please endeavor to keep the following housekeeping rules being displayed on the screen. Also, please drop your comments in the chat box if you have any contributions during the paper presentations. The Q&A icon on Zoom should be used for your questions. Please note that the session is being recorded. All registered participants will also receive copies of the presentation in their registered email address. At this point, I would like to welcome Yomi. Yomi is a Deloitte West Africa tax leader for the welcome address. Yomi, you may have the floor.
Thank you so very much, Damilola. A special welcome and good morning to everyone on this webinar. It's a very important session, and it's a closed user group, if you like, because this webinar is specifically for the financial services industry. Like Dami said, what we intend to discuss today is how business could navigate the growing complexity of tax operations, in the midst of the changing business dynamics, particularly for the industry where those of us on this call this morning belong. The truth is that a lot is happening around our world, and Nigeria inclusive. We are in a very fast changing regulatory environment, and the pressure on compliance is intense. The word that summed it up for me is this abbreviation VOCA, which is an abbreviation for the 4 phases of what we see happening around our world. The first letter there is, volatility. Volatility. Uncertainty is the next word. Complexity and ambiguity. Now, these 4 words sum it up in terms of what we see around business environment. So a lot is happening with the forces of globalization, with digitalization. We are, battling with pandemic. There is social transformation happening all around, and in the midst of all that is happening, there is the attendant compliance pressure that most of us on this call are facing for our respective organization. And these changes that we see around us is a combined effect of how the global regulatory authority, how the global response that we're having to tackling evasion, aggressive avoidance schemes, and all that the global world is trying to do to make sure that multinationals and businesses pay fairer share of their taxes. But beyond the global response is also what is happening around us locally. Nigeria particularly is aggressively chasing how to build and how to raise non-oil tax revenue, how to increase tax yield, how to deepen tax penetration, how to increase tax to GDP ratio. So a whole lot is happening. So on the global front, you will see things like automatic exchange of information, common reporting standard. Quite recently, we had the OECD 2-pillar solution to how they want to deal with global digital businesses. So conversations around global minimum tax and all of that. So and it's happening around the world. Each local authority is responding. In Nigeria, it's now become normal for us to have annual finance acts. So this come with changes on an annual basis. CAMA just got recently, reenacted. There's a lot happening on the VAT. There are conversations happening around how Nigeria wants to respond to digital taxation. And this industry, the financial services industry, is always at the center of all of these onslaughts because of the pivotal role, that the organizations where all of us, on the call represent. So if it's not affecting us directly as taxpayer, it's affecting us in terms of our responsibility, and where the financial services industry stay within the value chain. So, and your industry is extremely sensitive, so you see every financial services organization trying to deal with, and avoid reputational risk because of the sensitivity of the business that you run. And in a number of cases, each organization is trying to deal with these issues on their own. And the regulatory authorities understand this, and sometimes they play, this to their favor. So you are dealing with pressure from FIRS with your normal, regular, monthly and annual compliance, but also you have multiple audits, queries that is going on all at the same time. Most of you are responsible, to, dealing with all of the state internal revenue services across the 36 state and federal inland revenue services. Your normal annual, monthly compliance, compound that with multiple tax audits, sometimes overlapping. RAMFAC will come with its own, and regulatory authorities at different times. So just quite so much to be dealing with as people responsible for managing compliance within financial services industry. And on top of this issue is the growing rate of talent migration. So as the CFO, the FC, the head of compliance, or the tax manager, you are not even sure about the longevity, of the critical skill you have around you that are helping you to deal with, all of these compliance issues. So these are the kind of daily burden, that those sitting on the compliance desk within the financial services sector that they go through. So businesses needs to start, reimagining how do we transform the tax compliance function in order to cope with all of this changing regulatory environment. How do we devise a new model, that will deal with the challenges, that will be value adding, that will ensure that quality, and transparency is achieved, and also even be efficient in such a manner that cost is reduced. How do we get the organization to be able to focus on its core operation, to be more strategic, and allow compliance burden to be dealt with almost on an autopilot, basis. So that's the whole essence of the conversation that we are going to be having today. So this webinar is specifically crafted for you. We've put together conversations around what is happening within the industry and what will be a veritable model that can help achieve, compliance at a cost-efficient manner. So that's what this webinar that you've been invited to this morning is going to be dealing with. My colleagues on the call will be sharing their perspective, first from the advantage position as a partner serving the financial services sector, and also from the angle of tax operate. So what do we see around the world? What are financial services industry warming up to as a way to ensuring that they put their compliance burden under proper check? So I really want to welcome you to this very important session. Like I said earlier on, it's a closed group specifically for the financial services industry. So please feel free to interact, ask a question, and let's make the most of this 1.5 hours or thereabout that we have on the session. So I want to especially welcome you on behalf of all of my partners and colleagues on the call. And I say, let's have a productive and engaging session. Thank you so very much. Dami, I yield the floor to you.
Thank you very much, Yomi, for setting the tone for our deliberations. Thank you for stimulating our minds. We've heard about the changes in the financial service industry, the global changes, the local changes here as well, regulatory changes as well. Wow, thank you so much, Yomi, for that. Participants, please remember to drop questions in the Q&A section. Right, so we're going to the next segment of the webinar. And right now on the screen is a poll on the question, does your organization have a separate tax function? To participate in this poll, you can log on to www.mentee.com and use the access code 60875284. Or you can scan the QR code being displayed to participate in the poll. So we'll give our participants 2 minutes to go onto mentee.com to participate in this poll so we can understand if your organization has a separate tax function. Once again, you can log on to www.mentee.com and type in the access code 60875284, or you can scan the QR code being displayed on the screen. Right, our results have come in. I think we should give people 2 or 3 more minutes, 2 minutes to continue voting. The scores are going higher. Okay, so we've seen the scores now. I think it's 12:3. Oh, the votes are coming in. Okay, at this point, I think we'll stop the poll just to ensure that we have all that we need to move on to the next presentation. The tax landscape is very dynamic, and seeing the results from the poll, some organizations have a separate tax function, and a percentage of organizations operating in the financial service industry does not have this. So there's a need to critically evaluate operation models of tax functions so as to enable companies focus on the core business functions and free their finance team from routine compliance and reporting activities. There are different models of operations, and we'll be listening to our speakers deliberate more on this. We'll delve into this in our detailed presentation to be anchored by our Taiwo. So we'll be introducing Taiwo Okwade. His profile is currently being displayed on the screen. And for the next 30 minutes, we'll listen to him talk about navigation of the different growing complexity of tax operations in the financial service industry. Taiwo, you're very welcome. Please share your presentations.
So good morning, everybody. Thanks, Damilola, for that wonderful introduction. So my takeaway from the result of the poll is not necessarily different from our expectation at Deloitte. Based on the research that we have carried out on companies operating in the financial service industry, it seems a lot of organizations are now migrating to having what is called a separate tax function rather than having the tax function being an integral part of the finance function, which is a trend that we see on a regular basis recently. So my presentation is going to be around how companies operating within the financial service industry will be able to navigate some of the growing complexity of tax operations and business dynamics. So my presentation is going to be centered around four different areas. So I'm going to be looking at it from 4 different angles. I'm going to be looking at the global stay awake issues for companies operating in the financial service industry. Then I'll come back on, because Nigeria is part of a global village. So there
There's nothing that you see at the global level that doesn't affect Nigeria. We don't operate in isolation. So I'll be looking at some of those stay awake tax issues for companies operating in Nigeria, including companies operating in the financial service industry. Then I will also consider what the tax function of today and the tax function of the future should look like. What are the differences between the tax function of yesterday, or the tax function of the past, the tax function of today, and the tax function of the future? And then finally, I'll be looking at the kind of response organizations should be looking at coming up with to address the growing complexity of tax operations in the financial service industry. So I'll look at basically 4 big issues facing companies operating in the financial service industry globally. There are so many issues that companies in the financial service industry are facing at the global level, but I only have time to to consider about 4 of them, and these 4 are very critical for every organization that are affected to address on a regular basis. We have what is called the automatic exchange of information, which is AOI. Many countries are now engaging in what is called information exchange with other countries. So you have the initiative around automatic exchange of information that was initiated by the OECD and the G20 country. So the AOI as a concept, it creates what is called a legal framework for developing technical standards, which shall help in providing guidance, which seeks to improve how information is exchanged at a practical level globally. So you have Nigerian companies that are doing business on a global level, having to exchange information with competent authority of other jurisdictions where they do their business. We have multinationals from the UK doing business in Nigeria, having to exchange information, having to submit information to the competent authority of the UK, which in turn exchange that information with the competent authority of Nigeria, because such companies have operations in Nigeria. So this is where the world is going to at the moment. So you have what is called a global transparent initiative where companies that are operating anywhere in the world have to disclose certain information about their operations for the purpose of avoiding or preventing what is called tax evasion. Now, the other stay awake issue, which is very prominent, and I'm sure if you have been listening to the news in the last 2 or 3 months, you'll have heard about what is called the Pillar 2 solution. When Yomi was making his introduction, making his comments, he mentioned what is called the 2-pillar solution, Pillar 1 and Pillar 2, which is an initiative of the OECD, which was endorsed by more than 136 countries 3 months ago. Unfortunately, Nigeria is yet to agree to endorse this initiative. I'm going to be talking about what that initiative is all about. The initiative seeks to impose what is called a minimum tax rate of about 15% on companies that are engaged in digital economy all over the world. So if you have a company, for instance, Amazon, coming into Nigeria to do business, because that business will not necessarily create what is called a fees-based or permanent establishment in Nigeria, Nigerian Tax Authority has to find a way to subject whatever profit or whatever income that is being generated by Amazon in Nigeria to tax, which is why this 2-pillar solution was introduced by the OECD in conjunction with the G20 country. So we have a few countries that are member of the inclusive framework that have signed up to this. Like I said, Nigeria is yet to sign up to this, but from all indications, it appears that Nigeria will soon be endorsing this initiative, and Nigerian government we have to start imposing a minimum tax rate of 50% on multinationals that are operating in Nigeria. From the description of this initiative, the initiative is divided into 2, Pillar 1 and Pillar 2. Pillar 1 seeks to determine where profit should be subject to tax. So if you have a multinational entity operating in Nigeria, and that entity doesn't necessarily have a fees base or permanent establishment in Nigeria, what that Pillar 1 says is that the profit derived by that entity in Nigeria will have to be subject to tax, which is based on the destination principle. Then we have what is called a Pillar 2 solution, which seeks to establish a minimum level of taxation on multinational companies doing business around the world. So if you have a multinational companies doing business in Nigeria, what this initiative recommends is that such companies will have to pay minimum tax at the rate of 15%, which is what is obtainable everywhere in the world. This initiative will take effect from 2022, 2023. So it's not something that has started taking effect, but every company or every country that needs to sign up to this initiative, we have to come up with local legislation to give effect to this initiative. Another important issue at global level for companies operating globally is the issue of environmental taxes. As you are aware, the world is shifting focus from encouraging harmful behavior to taxing behavior that they believe will be harmful to the health of the planet. So companies that are engaged in harmful behavior, especially companies that emit gases, individuals that emit gases, or individuals that are engaged in activities that are likely going to affect the health of every other person, we now have to pay certain tax as a punitive measure to discourage them from doing so. There are different ways that these environmental taxes are being introduced in countries that have adopted them today. You have what is called corporate taxes. These are taxes that are imposed on companies that are involved in industrial activity that emit carbon. So we have what is called the carbon taxes that are imposed on the revenue of these companies to discourage them from emitting gases. For instance, we have something very similar in Nigeria. We have what is called the gas flaring penalty, which is imposed on companies operating in the downstream sector, upstream sector of the oil and gas sector. So if you have companies flaring gases, what the government says is that such companies will have to pay penalty based on the amount of gases that are being emitted. The other important issue at a global level for financial service industry player is the issue of mobility. Talents, move, very easily anywhere in the world at the moment. The advent of or the issue of COVID-19 has thrown to light a lot of issues around talent. So it is very easy for talent to relocate from one point within the global village to another point. So this creates a lot of tax and regulatory issues around mobility, especially for companies that are operating in the financial service industries. Now, going forward, because the world is a global village and because of the issue of transparency for multinational companies at a global level, there have been few problems that have been created by the advent of the automatic exchange of information. I'm only going to be, touching on maybe about two. Now, because companies all over the world have to be transparent in the way they report information to the competent authority of the location where they do business, it is usually very difficult for these companies to put all this information together in a format that be acceptable to the competent authority of their jurisdiction, because some of the guidelines that have been introduced by the OECD or around how information should be shared have specific formats that companies will have to follow in providing information about their activity, about their business. So it's usually very difficult for companies or operators in the financial service industry to put together this information in the format recommended by the OECD and by the tax authority of the jurisdiction where they do their business. Another issue around automatic exchange of information is the issue of privacy, data privacy. A lot of jurisdictions don't have laws that help to prevent the exposure of information of companies that are operating in those jurisdictions. So this is a big challenge for companies operating or that are seeking to share information with competent authorities of the jurisdictions where they do their business. So the next slide, please. So now this brings me to the stay awake tax issues in Nigeria. Like I mentioned, Nigeria is part of a global village. Nigeria doesn't operate in silos. There are certain issues at the global level that affect the operations of companies that are operating, that are doing business in Nigeria. Like I mentioned when I was talking about the two-pillar solution that was introduced by the OECD. In Nigeria, the Federal Inland Revenue Service is now seeking to subject companies that are involved in digital transaction, e-commerce transaction to tax. 2 years ago, the Nigerian government introduced what is called an SEP nexus, which is the Central Economic Presence Nexus for taxing companies that are doing digital transactions in Nigeria. Like I mentioned before, it is usually very difficult for Nigerian government to see some of these companies that are doing business in Nigeria, because those companies do not necessarily have to come to Nigeria to do business. So it's difficult for you to tax companies that are not necessarily having what is called a brick and mortar structure for the purpose of doing business in Nigeria. So what the Nigerian government is doing is to use the nexus of SCP to bring those companies that are doing digital transactions into Nigerian tax net. So it's a big issue in Nigeria at the moment. Another issue for companies doing business in Nigeria is the issue of multiple audits by different government agencies. I'm sure those of you that are working with companies in the financial services industry will be familiar with RAMFAC. We have the issue of RAMFAC, conducting separate audit and investigation on companies, especially banks and registrar within the financial service industry. So this, drives up the cost of compliance for some of these companies that are operating in the financial service industry, which is, basically, if you look at it, an attempt by government to increase revenue collection. But at the same time, government is using it to embolden or make it difficult for companies to comply with the provision of the tax law because of these multiple audits. Now, another issue within the financial service industry in Nigeria is the multiple audits and aggressive posture of the State Internal Revenue Service. So we have different state internal revenue service, the Abia State government, you have the Lagos State government, the Imo State government conducting audits at the same time on the books of business of companies operating within the financial service industry, especially banks that have branches and operations in different states within the federation. So this is a big issue for companies operating within this sector. Another important issue is the issue of withholding tax on interest payments by banks to individuals. So we have seen situations where states are seeking to collect withholding tax on interest that are being paid by banks to individuals, especially those individuals that open accounts in one state and are resident in another state. So you see the states where those individuals open the accounts seeking to collect withholding tax on the payments made to those individuals. And you see the states where they are residents seeking to collect withholding tax on payments made to those individuals as well. Another important issue is the issue of restriction or on bank accounts of defaulting taxpayer, which became prominent about 3 years ago due to the activities of Federal Inland Revenue Service. What the Federal Inland Revenue Service sought to do then was to restrict the account, access to the account of individuals that they believe were in default of payment of taxes. Now, the FRS is now bringing back this initiative again. So we are beginning to see a situation where banks are now being asked again to restrict access to the account of this individual. This creates a lot of privacy and litigation issues for players in this industry, especially for banks that are being required to follow, to enforce the directive of the Federal Inland Revenue Service. In the last few months, between January and October of this year, the Federal Inland Revenue Service introduced what is called the Tax Pro Max. The Tax Pro Max was meant to allow individuals and companies that file their tax returns with the Federal Inland Revenue Service to be able to file their returns electronically. But there are a few issues that have been thrown up as a result of the introduction of Pro Max. Companies are beginning to have issues. Whenever they try to file their tax return, they experience what is called a downtime. But this downtime in filing of tax returns have not been recognized by FRS, because irrespective of what happened when you're filing your tax return, FRS is still seeking to collect penalty and interest for companies for their inability to file their tax return at the appropriate time, without considering the fact that the system was having an issue or the system was having a downtime. Another important issue for companies operating in Nigeria is the recent tussle between Federal Inland Revenue Service and the state tax authorities around the collection of stamp duties and VAT. As you are aware, some states within the federation are seeking to collect stamp duty on the same item, which the FRS is also seeking to collect. So we are having a dilemma for some of these financial service industry players with respect to who exactly should be responsible for collection of stamp duty on the items that the FRS is seeking to collect money on. The same issue has been highlighted with respect to VAT. So we have a situation where the states are coming up with their own laws with respect to VAT administration and collection. Now, tax administration in Nigeria. So I'm going to be looking at the challenges that taxpayers are facing in terms of their compliance and in terms of dealings with the tax administration in Nigeria. Now, there are so many challenges that taxpayers are facing, and I cannot exhaust everything during this session. So I'm only going to be focusing on few of the challenges. Now, what we have seen in the country is the insufficient use of technology. Fortunately, the FRS is now moving away from manual collection or manual filing of tax returns to electronic filing of tax returns. But this is still not sufficient enough for companies that file their tax returns to be able to do so with ease. So the tax authority will now need to also up their game with respect to filing. As far as filing of tax returns is concerned, maybe about 3 or 4 states in the country are still able to allow taxpayers to file their tax returns electronically. One of those states is the Lagos State Inland Revenue Service. So we still have issues with other states where taxpayers have to go and file physical tax returns with the tax authority, which is not convenient for a lot of taxpayers, especially those that have operations in all the states of the federation. Another issue another challenge that taxpayers are facing is the issue of multiplicity of taxes. So we have a situation where taxpayers are facing different kind of taxes at the local government level, the state level, and federal level. So this is creating a huge burden on taxpayers, because taxpayers will have to comply with some of these laws that these different levels of government have to enact for the purpose of tax collection. So because of some of these laws that that states are beginning to come up with, without necessarily giving information to taxpayers around the enactment of this law. So you see taxpayers defaulting in complying with the provisions of some of these laws, and taxpayers are being punished for not having proud knowledge of the enactment of these laws. We've seen a situation like that in few states like Imo, Abia, and I think Kwara, around the enactment of laws that are not necessarily communicated to taxpayers. The other challenge is the issue of trust. At the moment, there seems to be a lack of trust between taxpayers and the tax authorities. So, which is making things difficult for both taxpayers and tax authorities. When there is a lack of trust, it's usually very difficult for both parties to be able to deal with each other without having some kind of suspicion at the back of their mind. So this is a big challenge for taxpayers that have to be overcome in Nigeria for our tax systems to be more effective and more pronounced. So I'm going to move to the next point around what a tax function should look like. What should we be looking for as players in the financial service industry? What should we be looking at in the tax function? I know that when the result of the poll was released, a significant number of participants said that they believe they have separate tax function within their organization. But having a separate tax function is not just enough. There are certain things that are expected of the tax function for that tax function to transit from a tax function of the past to a tax function of the future. We've seen a lot of changes in the tax function, especially when you look at how tax functions are being used today and how they are expected to be positioned to be very effective in the foreseeable future. So for you to have an appreciation of what a tax function of today and the future should look like, I'm going to just give an insight into what a tax function of the past look like. The tax function of the past focuses more on compliance. The tax function of the past is not necessarily proactive. What it does is to ensure that it complies with or make sure that the organization complies with the provision of the law and ensures that returns are filed at the appropriate time. Should the function of the tax function be limited to this? Tax function of the past also lack what is called a distinct tax function. Like I said, most tax functions within the financial service industry, especially in banks, seem to be an integral part of the finance function. So we don't have a clear delineation between the activities of the staff of the tax function and the finance function. They seem to be doing everything. So you have a staff that's supposed to specialize in tax, doing some kind of finance activity, which makes it difficult for that tax function to be or to operate at optimal level. So the tax function of the past, doesn't use what is called, technology adequately. So you have a situation whereby the process of complying with the law is manual, and it's really very difficult for that tax function to be very effective and proactive because everything is done, manually. So the tax function of the future is a bit different from this tax function of the past, and that is why the tax function of the future seems to be more effective in the way they handle or the way they use or leverage technology to change the process of compliance with the provision of the law. Another important limitation of tax function of the past is that it lacks involvement in business strategy. Tax function of the past seem to be reactive in nature. The tax function of the past also seem to be operational in nature. It doesn't get involved in strategic and business development decisions within an organization, which is why it's limited in its effectiveness compared to tax function for the future. So let me now look at what are the things that have been impacting the tax function of today, which necessitates the transition into the tax function of the future. We have what is called the global regulatory changes. There are so many regulations all over the world now that are necessitating the transition into the tax function of the future. For instance, we have laws all over the place, OECD guidelines coming up, OECD, the inclusive framework around the common reporting standard, the country-by-country reporting. We also have the FATCA, which banks are expected to comply with, which is a law introduced by the US government requiring banks to file returns with respect to the reportable accounts of their customers. So because of some of these global initiatives, task function cannot continue to be redundant. It has to be reactive in the way it reacts to changes within the environment. The rapid change of technology. So you have a lot of changes in technology. The task function cannot afford to do everything manually. The process has to be automated. The process of complying has to be automated. Task function has also been tasked with the responsibility of protecting the brand of organizations. So because organizations are concerned about the brand risk, the task function is now being transitioned to protect the brand of the organization rather than being reactive only in nature. The issue of global transparency is also helping task function to transit. And because of limited resources that organizations have nowadays, task function will also have to transit. Task function cannot afford to have so many people, operating within that confine for the purpose of ensuring task compliance. Task function can work with limited resources and still be functional and very effective. Task function is also expected to add more value to an organization. You are not just operating a task function for the purpose of compliance alone. You need to add value as far as that function is concerned. Now, so how do I expect the task function of the future to look like? Task function of today and the future focuses on task transformation with an emphasis on reducing the overall cost of operations and proper task planning and strategy. The task function of today and the future focuses on different aspects, 3 different aspects of the business, which is operations, talent, and technology. So I'm going to be looking at these different aspects, which are very important for the purpose of a task function to be a task function of the future, to transit from the task function of the past to a task function of the future. A task function has to integrate both tasks and the business. So the task function must be able to see tasks as an integral part of the business, must be able to see tasks as a single item that can erode the bottom line of an organization. The task function must also be able to understand task operation easily without having to contact 40 people. So you don't necessarily have to have so many contacts, different contacts. Task function can be confined, can be limited, and still be operational and effective. Task function shorten response time and accelerate ability to meet deadlines and increase quality. So task function is not just about meeting deadline. It also ensures that quality is increased or is improved. Around talent, task function flexes resources to be able to meet demand. So you don't necessarily have to, like I said, you don't necessarily have to have 40 people or 20 people within a task function. You can flex the resources within an organization and still be able to meet certain demand with respect to deadlines, with respect to response to queries from the task authority. Task function must also be able to access specialized experience on demand as needed, which is where the task function of the future is going to. So in terms of technology, what do I think the task function should be doing? Task function should be able to allow information to flow through an enterprise. Information should be able to flow from one point to the other, especially when that information is critical for decision making. You need information from the IT department. It should be very difficult for the task function. It will be very easy if you have a task function of the future to be able to interpret and be able to connect the information that has been obtained from the system for the purpose of decision making into the future. The task function must also be able to create a foundation for automation. Like I said, everything does not have to be done manually. The world is changing. So the task function has to be technology savvy. So has to be digital. People that are working within the task function has to be digital savvy, has to be technology savvy. So finally, how do I expect organizations within the financial service industry to respond to the growing complexity of tax operation within that particular industry. So I'm going to be looking at, just 5 suggestions. There are so many different ways that you can respond to complexity within, the financial service industry, but I'll focus on only 5. Organizations have to focus on compliance or focus on tax planning and efficiency rather than compliance. So, like I said, the tax function of the future has shifted attention from compliance alone to what is called planning and strategy. So, for an organization to be very effective, or for organizations to be able to address the growing complexity in the business environment and the dynamics or changing dynamics of the business environment, it has to shift attention from compliance to strategy and planning. Organization must also be able to align tax operation with organization strategy. So the two cannot be separated. You must be able to align your tax operation with the organization strategy. The operation must follow the strategy of the organization. And the tax strategy must also align with the overall strategy of an organization. Additionally, an organization must be able to adopt technology and automation of tax processes. You can see that I keep mentioning automation. Automation is one of the single most important aspects of the tax function of the future. So for you to be able to address, or for you to be able to meet, address the growing challenges within the financial service industry, organization must be able to adopt that technology and be able to automate your process to make it seamless when it comes to compliance and meeting deadline. Like I said, focus should not be on compliance, but when compliance is necessary, you can automate the process that will ensure that compliance is done in a seamless manner. Organization must also be able to establish digitized and specialized task function. And finally, organization must be able to anticipate future changes and conduct regular impact assessment in order to ensure that there is transformation saving. Transformation saving is very important for you to be able to know whether your organization is adopting the right model when it comes to addressing or responding to the growing complexity within your industry. You must be able to look at some of those changes that are potential changes that are likely to come in the future and see whether there will be transformation savings as a result of the assessment that you have performed on those changes that are being anticipated in the future. So, so I'll wait for comments and questions, after Patrick's session, so that we can address some of those comments. Thank you very much, everybody. Damilola, thank you. I yield back.
Thank you very much, Taiwo, for providing technical expertise and highlighting various local and global changes in the tax landscape, especially for players in the financial service industry. I think Taiwo touched on something very significant that comes to play in our experience with players in the financial service industry, the limitations of the tax function of the past versus tax function of the future. As such, we know that the C-suite needs to get back to work to reinvent their tax models, to play efficiently for business planning and strategy, and also to have tax transformation savings, as Taiwo has mentioned in his presentation. Taiwo also noted how we can be more equipped to respond to these challenges posed by tax operations and the various regulatory changes in the financial service industry. Really, it is evident that taxpayers they're inundated with several challenges, ranging from multiplicity of tax, aggressive approach on tax recovery, rapidly changing use of technology, and several things regarding global compliance. Right, that was a very insightful session, Taiwo. Thank you so much. We have come to the very first end of the first segment of this webinar, and we'll move on to the second segment. But just before that, we have another poll question, just to stimulate our understanding of tax operations so far. Remember, questions will be answered immediately after the next session. We'll have a Q&A session for about 15 minutes after Patrick's presentation. But first, let's go to menti.com and type in the code 47563716. Our question is, which of the following would you like to see in your tax function? A, adoption of tax outsourcing models. B, use of technology and automation of tax processes. C, adoption of separate tax function from finance. Let's give our participants 2 minutes to take part of this poll before we go to the next presentation. Please go to menti.com and participate. I can see the green number in participation. Thank you. Right. Let's have our results. I can see that, sorry. Right. Our results have come in and a number of participants are skewed towards the B option. Thank you so much for your feedback. This is intended to stimulate our mind on the next session as I introduce to you Patrick Nze. Patrick is a partner in our tax and regulatory service function, and he leads the tax operate unit. Patrick, please, you may commence your presentation.
Thank you, Dan. Good morning, everyone. So Taiwo has unpacked the key challenges, and you can agree with me that the right tax operating model is required. And when Yomi was giving the opening remarks, he mentioned of the tax and fiscal regime, the development in the tax and fiscal regime and the approach of the tax authorities. So you can agree with me that the tax and fiscal regime in Nigeria is rapidly changing, and this is driven from global. The tax authorities are becoming much more aggressive. The tempo of tax is on the increase, and tax awareness is also increasing by the day. I mean, what is driving this? The oil revenue is no longer sustainable means of revenue. So the non-oil revenue is what is sustainable, and tax is a major component of that. So we're going to be looking at reimagining the way tax operates for the future. And we're going to discuss that under 5 areas, looking at the new challenges currently facing tax. How do we prepare for the future of tax? The tax transformation operating models. We're going to look at the different models and what is tax operation, tax transformation. We're going to know more about that and what are the benefits organization can derive from tax operate. And finally, we look at the paths forwards. So like I mentioned, the profile of tax is actually increasing every day from every perspective, both from investors' perspective and the board's perspective. There are a significant number of taxes to pay, and the values are increasing by the day. And as the values increase, so the inherent risk in not managing them properly. So for business to succeed, they must take adequate control of their risk. And how organizations are doing that, they do that by setting up tax risk management processes in order to manage their risk and create value to investors. So they do this further by setting up a tax department. The tax department or a tax function, a dedicated tax function, to evaluate changes in the regulatory framework and how that affects the business, and also give assurance to the stakeholders that they are managing the risk appropriately. It's also helped to standardize the processes required for the company to operate. So for a tax function to be efficient, it must have the right skill and must be technology and automation driven. And that takes us to transformation. When we talk of transformation, it's not an end itself. So when we discuss with organizations, there are certain problems that will come to the fore. These problems could be unique to a particular organization, but you find out that they cut across. They range from being involved in repetitive tasks and looking for solution. Sometimes the data is not centralized. Sometimes they don't have the budget to engage the right skill to manage the tax function. They may not have the resources also to invest in technology. And the tax leaders, in some cases, do not get insights from reports coming from the business in order to make a decision. So you hear tax leaders saying, my tax team get involved in manually repetitive tasks whenever we are going to support the tax compliance. And then some will say, we do a lot of reconciling to ensure that there's accuracy of the filing we do. So these are all problems that tax transformation will solve. So like mentioned by the earlier speaker, today's business environment is changing rapidly, and that imposes pressure and challenges for tax, resulting in the need to consider new operating models that will add value and still maintain quality and transparency. So what are the new challenges currently facing tax? We have the regulatory changes, operating in a dynamic tax environment. Taiwo spoke on OECD Pillar 1, Pillar 2. Tax authorities are changing their approach. The compliance landscape is changing. The tax authority is becoming more and more aggressive in carrying out their review and compliance enforcement. So this thing is coming, it's developing by the day. And so these are challenges that the tax function should really handle. So the next one is limited resources for handling tax compliance process and technology. So compliance requirements are coming up, and there are some organizations have these limited resources. Some countries have adopted, the tax authority is now having access, digitalized access on real time to the data of companies. And so the tax function need to actually prepare for this. I see in the next 5 to 10 years that this is going to be what we operate in all the regions. It's been introduced in Latin America. Italy followed. Spain has done that. And so many other countries, are looking towards that. So Nigeria will not be an exception since this is driven from global. Timely and optimized reporting is a challenge. It's part of what I mentioned. Now we have the rapidly changing technology that the tax function need to comply with, and there is need to add value. That's also another key challenge, and then there is cost sensitivity. It is a challenge facing the tax function. So how do we prepare for the future of tax? So it requires that businesses must be agile and flexible to adapt to the disruptive business circumstances coming up. Both the companies, tax department, and tax professionals must learn how to leverage new technologies and reskill for the digital future. So we can look at this in three ways. First, teaming with the machine, that's collaborating with the machine. The next, moving the tax department towards digital future, and then working and thriving in a digital world. So on the teaming with machine, this involves assembling multi-skill teams that you have automation and information technology professionals coming together. It must be purpose-driven. It will challenge the norm, the way things are being done before, and manage the hybrid workforce. So moving the tax scene towards digital function, we need to identify the talent requirement. What are the talent requirements? We'll deal with that, focus on change management, having support from top management so that the project will be a success. So we also encourage continuous learning and adaptability. And the next stage, which is a more advanced, is working and thriving in a digital world. This will involve becoming more tech savvy, expanding our analytical skills to leverage data better, tear down the silos to foster communication, and develop problem-solving skills. And as a watchword, to always learn. So looking at the tax transformation model, we have the in-source, the co-source, and the operate. So there are three core decisions at any point an organization wants to make a decision on the right tax transformation model. The question is, do we in-source? Do we co-source? Or do we operate? Now, what does it entail? The in-source, which is the first pyramid on my left, seems to address a situation where the tax function is being run in-house without the support of any external party. So it presupposes that they must have the right talent. And so along the continuum, you move to the second one, where you have a combination of the in-house tax team and a third party who provides support. And then the last one, which is the operate, which we're going to be talking about, is where the tax function is managed by a tax party, and you have at the top of the pyramid, you have top management making key decisions, making executive decisions that the organization requires. So by outsourcing the tax functions, they are mainly concerned with strategic decision making at the top level. And this is the way most organizations are going. They are shifting from in-source, co-source to an operate model. So what is the future of operate? You know, like I mentioned, it has the in-house leadership. You have the company will be able to benefit from leading edge technology and top clients, because this is completely outsourced. And so the technology required of the future tax function will be provided, and the talent required is equally provided. So this is an extension of the conversation. We have the in-house model. These are the features which we have discussed. You have the hybrid model, which is a combination of outsource and in-house. And you have the fully outsourced model. So tax operate is useful for clients or entities having challenges with limited resources, highly regulated environments where there are regulatory changes, companies that require reform, sort of. And so, what is tax operate? So tax operate is Deloitte service offering where we assist tax leaders to execute their functional responsibility. It is a consultative offering where we assist tax leaders to choose the tax model they require to run the organization. So wherever the organization is, we meet them at that point and help them along the continuum, whether you are in source stage or you're the co-source, or I'm moved to operate. So tax operate is led by technology and the right talent. And so if you talk of Deloitte tax operate, technology to support that is my insight. My insight is a tool, a collaborative tool between the Deloitte and the client for document management, real-time dashboards, knowledge management, carrying out analytics, and data review. So at every point in time, the client can have access to this. It's a robust tool to manage the client tax. And then you have the right talent supporting the client. So what are the benefits of this model? Moving from co-source to tax operate. There are operational benefits, there are technological benefits, and the talent benefits. When you do the value analysis, you find out that it reduces cost. It reduces employee costs because tax operate offers the benefit of talent transfer. Talent transfer in the sense that it's rather both ways, because the current key tax professionals could be absorbed by the professional service, and then still engage them in carrying out the tax services to that client. And in the other way, we can second our tax team to the client, assuming that a hybrid is agreed. So it provides benefit of organizations having resource challenges in terms of top talent to run the tax function. So there are savings that the investment that the entity can reinvest in other areas. When you also talk of the technology benefits, I've mentioned the capability of my insights. It's transform the tax processes. There is optimal reporting, and you have access to leading edge technology. And of course, there will be coordinated approach to tax compliance, assuming you have organizations that are spread over different regions. I've talked on talent benefits that seem to take care of top, provides top talent and all that. So how do we determine your path forward? You can do that by carrying out tax department assessments. This is a complete assessment of where your tax function is. So Taiwo was talking of how what is required of a tax function for the future. So this assessment will provide basis for transformation. That's the first step. It could also come via a lab carried out for a custom tax lab dedicated for the clients, which we focus on the pain points. I mentioned some of the pain points which we picked from this process at the beginning of this presentation, when I mentioned getting involved in repetitive tasks, data not centralized, having to spend time checking and rechecking data for accuracy, and not having enough budget to engage the right skill required for the tax function. So a lab of that nature will unpack all those issues, and then a value analysis is required, because when I was talking about cost sensitivity, it will not be easier to actually determine the benefit unless the value analysis is carried out to really determine the cost and benefit inherent in taking the tax operate. So there has to be a transformational roadmap. So this roadmap will give the organization the roads, the plan, the milestone to achieve transformation. So transformation is not a one size fits all. So to transform a traditional manually, a company carrying out manual tax to a technology-driven one requires some time. It's not something you start and achieve immediately. It requires some time to actually carry that out. And so to transform, to reimagine the tax for the future, we need the following. We need to monitor development, technological development in the tax space, so that we'll be able to align. Like I did mention the plans of tax authority to have digital access to the data of taxpayers, and that's really won't be long. We are looking at in the next 5 to 10 years, because that has started in some region. So Nigeria is not going to be an exception, since most of the policies are being driven globally. So there's need to prepare for this. There's need to carry out tax department assessment, and then determine the roadmap. There must be a robust roadmap to transform the tax function. And most importantly, it must have the support of management. And then there's the need to reskill. It's very important to build capability. It's very important. And then consider the right operating model, and then the benefits that the tax operates will give to the company. So thank you.
Thank you very much, Patrick, for stimulating our imaginations on the future of tax. I think this is critical as players in the financial service industry. They're gearing towards budgeting, planning, and business strategy for 2022 and the years ahead. Patrick mentioned the need to monitor regulatory changes and developments in alignment of business strategies to the tax function. One very critical thing that stood out for me was also amplified in Patrick's presentation was the importance of the right mix of technology or automation and talent for an operational tax model. By taking a fresh look at sourcing option, buttressed by powerful technology capabilities, executives may find that they can have the best of both worlds. That's a high-performing yet highly cost-efficient tax department that is rightly integrated with finance and the rest of the organizations, helping to drive planning and support at an early entirely new level. Thank you very much, Patrick, for that in-depth industry expertise on the transformation roadmap on how businesses can determine their path forward in the future of tax. We're moving on to the next segment of the webinar, which is almost the end of the webinar. That's the question and answer segment. We have seen that a lot of questions are being placed in the Q&A chat box, and it's at this time that our presenters will take those questions. Right, so the first question that I can see there is, what impact will the potential sign-up of Nigeria to the global minimum tax regime have on the significant economic presence role that the country has already rolled out for digital NREs, that's non-resident entities operating in Nigeria? I think I will tell Taiwo to take that question. Taiwo, over to you.
So thank you, Dami. So that's an important, very important question. So the issue with the two-pillar solution is that if any country sign up to the initiative, what that country is saying is that whatever is included in that agreement will have to be binding on the country that is the signatory to the initiative. So what this means at the moment is that if a country has a unilateral rule around the taxation of digital business or digital economy, then you have to give up that rule. When I was making my presentation, I said that when the initiative was announced in October 2021, OECD highlighted that countries that are at the moment operating a unilateral rule around digital taxation can continue to do so until the final paperwork around the adoption endorsement of the rule is finalized. So the paperwork has not been finalized, so countries can still continue to operate their unilateral rule around digital taxation. So Nigeria has SCP rule, like you correctly mentioned. So the SCP rule will still continue to operate in Nigeria until Nigeria becomes a signatory, and the final paperwork around the endorsement adoption of the two-pillar solution is completed. So at the moment, SAP rule is still the prevailing rule in Nigeria. So if Nigeria doesn't eventually sign up to the initiative, Nigeria is not going to be bound by any of the content of the agreement around the two-pillar solution. So hopefully we'll sign up, because the federal, if you have listened to some of the comments by the Federal Inland Revenue Service around the two-pillar solution, the Federal Inland Revenue Service believes that adoption of that pillar one means that Nigeria will be losing a lot if we adopt the two-pillar solution. Because if you look at pillar one says that companies are only going to be taxed in the jurisdictions where they derive income. So if you adopt the two-pillar solution and you are unable to determine that the income of some of these companies are derived in Nigeria, they will lose as a result of that. So which means that some of these companies won't pay tax in Nigeria, but at the same time they will be paying tax in their country of residence. So hopefully we'll be able to the country will be able to sign up to the initiative, because we don't want to be an island when it comes to some of these global initiatives. Thank you.
Thank you very much, Taiwo, for that very technical explanation to that question. I'll move over to Patrick. Patrick, what are the key indices and consideration that business tax or finance leaders should evaluate to ascertain whether or not the business is in a need of a complete outsourcing of their tax function? That question is for Patrick.
Yeah, so thank you, Dami. Like I mentioned, so the key consideration there is the technology. Can the entity support the technology required for the future the future tax function. So the second one is talent. Can they provide the talent required? And then every organization wants to be efficient above all. So that's why I mentioned the value analysis is required so that the company will determine whether they are efficient running the model they are running. But I can tell you, by the time that value analysis is carried out, you find out that it will be cost. They will derive cost benefit from adopting the tax upright. So those are the key considerations every business should look at in determining the right model. And again, when you talk of the ever-changing regulatory environment, and you have the tax law, even in Nigeria, the tax law changing every day. So you require a model that really can take care of that so that you can go to sleep. Thank you.
Thank you so much, Patrick, for providing insight on how companies can determine the tax operating model that is suitable for them. I'll take one more question, and this would be directed to Taiwo. How does a big commercial bank ensure that it doesn't pay double tax on the interest paid to customers from different states in the country? I think this is about withholding taxes and multiplicity of tax mentioned by Taiwo during his presentation. Taiwo, over to you.
Yeah, so thanks, Amy. So this issue that has been raised in this question is one of the biggest issues that commercial banks are facing, some of the biggest challenges that commercial banks have to overcome, especially when they are dealing with different tax authorities when it comes to the issue of withholding tax on interest payments. So now it is possible for commercial banks and banks to be able to, at least avoid, double layer of taxes, or be able to avoid paying tax on the same item in different states of the federation. So all you need to do is to be able to identify exactly what the right indices that you're going to adopt in determining the states where the customers that are being paid the interest are located. For instance, like I mentioned before, you have banks that are able to determine where the customers are able to open their bank accounts. So if you're able to determine where the customers are, open their bank accounts, you either adopt that, because you see a lot of customers that will open bank accounts in one state, moving to a different state without necessarily informing the bank about the change of their place of residence. So what you need to do is to adopt a particular parameter. Do you want to pay tax based on the place where the customers open their bank account, or do you want to pay tax based on the place of residence? The general rule is that taxes should be paid where people are residents, but it's always very difficult for banks to be able to determine where people are resident at every point in time, especially when those individuals have not been able to provide any information to the bank around the change of their addresses. So what the bank, what I'm going to advise the banks to do is to adopt a consistent approach. You either take one or take the other. Either you take the place where accounts are opened, or you take where the customers are residents. Now, if you're able to do that, then you need to be able to adopt a model that will help you automate your process in such a way that you'll be able to analyze your interest in a seamless manner. There are different ways of analyzing interest. Deloitte has a tool called interest expense analyzer. We use that tool to help our banking clients to separate or to analyze their interest expense into different states of the federation. We can either use the place of residence of the customers, or we use the place of the place where the customer opened their bank account. So some of our banking clients determine exactly what model they want to use. Either you use one or you use the other. So if you use one, just make sure that you are consistent in the model. You can't use one model in 1 year and the following year you change the model. You have to be consistent every year around the model that you are adopting. So if you're able to do that, analyze the interest. If you analyze that interest, there's no way you'll be able to pay withholding tax on the same item to more than one state. The interest will be paid to a single state. You'll also be able to use that analyzer to determine the withholding tax that is due to Federal Inland Revenue Service, because that analyzer will be able to tell you what the status of the customer, whether the customer is an individual or an enterprise or an incorporated business. So these are the different ways that companies can go about avoiding duplication of taxes when it comes to withholding tax on interest. Thank you.
Thank you so much, Taiwo. You've heard it from the horse's mouth. It's very important to deploy that technology to understand and be consistent in the approach adopted by any bank in computing withholding taxes payable on interest expense. I'll take one more question, and that will be to Patrick. Can Deloitte provide a tax function assessment? I recall during Patrick's presentation, he talked a lot about the tax department maturity assessment, and a participant is here asking that question. Patrick, over to you.
Yeah, thanks, Dami. We provide tax maturity assessments where we determine where exactly the taxpayer is in the journey to transformation. So that will help to really work on the right model. So we can forward that assessment if we are contacted, and take the discussion from there. Thank you.
Thank you very much, Patrick. Thank you so much. We have many questions, and I don't think we'll be able to answer all, but please be rest assured that the questions will be responded to and sent to your registered email. But just one last question from Azu Okonkwo to Taiwo. The deployment of Tax Promas is a step in the right direction. However, has exhaustive effort been asserted to make the platform more user-friendly, functional, and reliable?
Yeah, that's another very good question. So at the moment, that platform is not operating optimally. So if you are filing your returns, there's still a few glitches that FRS is trying to grapple with. So we are still, the FRS is yet to get to that point where they can say confidently that people can file their tax returns, taxpayers can file their tax returns seamlessly. So I'm aware that FRS is taking steps to ensure that the platform is more user-friendly, and people are able to file their tax returns without necessarily facing any downtime in the system. So hopefully, before the next filing deadline, which maybe the major filing deadline, which is expected to be for financial institution, which is expected to be June 2022, FRS will have been able to resolve some of the issues, especially around filing of corporate tax returns. I know people still have to file monthly tax returns, especially value-added tax returns. Hopefully, I think FRS sent a communication recently telling people that the public, that they are going to remove interest and penalty that they have included in the platform against taxpayers that failed to file their tax return before the deadline that was given previously. So that's a good way, to let taxpayers know that they understand the plight of taxpayer around the filing of tax return using, through the tax promise. So, like I said, we expect, some of these issues to be resolved before the major filing deadline of June 2022. Thank you.
Thanks a lot, Taiwo. Thank you so much for that. We thank FRS as well for its continuous commitment for technology deployment to aid taxpayers. That was a very engaging Q&A session. I don't think we were able to take all the questions, but like I said earlier, please be rest assured that we are collating your questions and we'll respond to you. Once again, it looks like we're coming to the end of our session. I would like to thank our presenters for providing technical and industry expertise on the various complexities in the financial service industry. We also appreciate our participants for holding the fort on this webinar. We hope that you'll be able to reassess current business models and reimagine the way tax operates for the future by adopting the various models of tax operations that we have talked about in our presentation. To end the session, I would like to yield the floor now to Funke, a partner in the tax and regulatory function, for her closing remark. Funke, you may have the floor now.
Okay, Dami, thank you so much for inviting me to make this closing remark. I think where I want to start is to appreciate all our participants for joining us for this webinar. I know it's a very early engagement, but you will agree with me that it's been worth the while. We want to say thank you for joining the session. We hope you are leaving the webinar with the relevant insights on how to structure your tax operations for the future. Specifically, I believe we have learned a lot on what the tax function of the future should look like as we adopt and embed technology into the operations of the organization. Also, we hope that the webinar has stirred up critical and strategic business dynamics organization need to consider ahead of the budgeting and planning for 2021. As earlier mentioned, the presentation by both Taiwo and Patrick will be shared via your registered email address, so you can always refer to them. And if you don't get anything from us, please just reach out to the team. Deloitte, as usual, is positioned to support your organization with specific requests as you move towards operating a tax function of the future, because that is the whole essence of it. We want to be more operational, we want to be more efficient, and if there's any way you think we can help you, don't hesitate, please reach out to us. Our business tax and our tax operating team, they are willing to support you in considering operating model options that think of people, process, data, technology to increase efficiency. We've heard of what FRS is trying to do, and so we are trying to integrate both of them such that we have a seamless tax operational structure in any organization. So please feel free to reach out to us if you require any clarification on how the subject of discourse will impact your business. Once again, we want to say thank you for making our time to join our webinar, and we hope that you enjoy the rest of your day. Thank you very much.
Thank you so much, Funke.
Thank you, everyone.
Hello, my name's Andy Wither. I'm the global leader of Deloitte's tax and legal operator market offerings and a partner in Deloitte UK. For the past 25 years, I've been working with some of the world's largest companies, helping them transform their global tax operations. And I'd like to tell you about what I'm seeing today. This is a volatile time for tax functions, with COVID-19 adding a raft of new challenges. The prevailing expectation is for tax departments to find more value and do more with less. The current economic uncertainty has certainly added cost constraints and headcount pressure. Meanwhile, changes in tax law and regulations continue to come thick and fast. At Deloitte, we're talking with companies every day in every geography and across all industries about their COVID-19 response. These are historically difficult times. Still, our experience leads us to believe that there is opportunity to be found in every challenge. For example, right now we believe you have an opportunity to rethink your organization's tax operating model, to create efficiencies, to free resources to focus on higher value activities, to increase quality and agility to meet changing business demands, and to gain confidence that you are effectively managing your tax responsibilities around the world. Deloitte takes a multidisciplinary approach when it comes to tax operations. We work with you to explore a continuum of operating model options because we know that tax transformation is never one size fits all. Together, we get to the root of your challenges to help define your goals and help shape your vision for a future tax department. We call this our operate approach. It shapes how we deliver to our clients in new ways the services we've been providing for decades, such as global compliance and reporting. We can bring you the technology guidance you need to keep core functions and responsibilities in-house. Or we can provide you with tailored co-source or outsource solutions for part or all of your tax compliance and reporting requirements. This can even include transfer of your talent so that your experienced core team members remain available to provide continuity in the strategic oversight and management of your tax activities. Our approach to tax operating model transformation can offer real benefits for your company in very short order. We know this is important at a time when tax leaders are routinely being asked to make annual savings of 20 to 30%. With Deloitte's help, you can get faster results while managing implementation costs. You can access our specialized tech-savvy tax workforce, supported with the latest technologies such as robotics, artificial intelligence, and cloud computing as you need them. You can connect your tax and finance data and processes to share information across your enterprise and cut through the noise of regulatory changes to quickly identify and quantify the impact to your business. This approach is working for other Deloitte clients, and we believe it can work for you. This is a crucial time. Decisions made now can affect the health of your business for years to come. My colleagues around the world and I would be delighted to meet and talk more about the benefits that can be achieved